Hey, what is up guys, welcome back to ProTraderPath, and in today's video I'm going to talk about the most awaited fair value gap and measuring gap. Okay, so I had a idea on making a video on breakaway gap together with this part, but the problem with that is the breakaway gap requires bit more of explanation, and it will be actually a longer video than anticipated, and maybe it will be too much information in one video. So since my approach is to teach all the people who has literally zero trading knowledge to the advanced level, so this will be lesson number 4. If you have missed my previous lessons, I highly recommend you to start from the lesson on, although it's very basic, but I want you guys to know that even if it's the basic things, there are lot of interesting things coming up in near future which will blow your mind away. And in that sense, in that case, you need to know actually the way I'm teaching you guys. It's been nearly like 5 years that I have been doing these things. So what I want you guys to know is, what I'm doing here is I'm saving your time. Okay, I'm making the lessons to the point where you need to know it. I have learned that the less you know, the better for you. I will explain that later. Okay, so without any further ado, let's start. So what is a fair value gap? So a fair value gap is when 3 consecutive candles, it can be any color regardless of the color, when 3 consecutive candles doesn't touch each other with any of their parts. So what I mean here is, let's say there is candle 1, candle 2 and candle 3. Okay, so 3 consecutive candles, when they leave some space in between candle 1 and 3, that space is your fair value gap. So what happens here is, the first candle or the highest candles low and the third candle or the lowest candles high. Okay, so the low and the high, you will see here there is a gap, it's not touching each other. I will show you guys the chart example as well, the real chart example, but for now let's focus here. So what happened here is, as you can see, there is this area and there is this area that's not touching each other. Okay, so usually what happens is, market tends to usually touch the candles. Okay, so it's like sometimes goes just like that, sometimes goes even higher. Okay, so if it's not touching like this or like this, if it's leaving any gap between, but if there is a gap between the first candle's low and the third candle's high, that gap is called the fair value gap. Why this happens? If you guys have any sort of trading idea, let's say like my earliest stages, I started with crypto. Okay, so in my earliest stages I used to trade in crypto in exchanges like Binance, Coinbase. What happened there is, in my earliest stages I noticed that I had an order placed, but price went to that area, or price was coming down to that area, but it did not fill up my order. Why? Because for a certain period, for a, let's say during this candle and this candle formation, the second and third candle formation, it was so aggressive and so quick that price could not fill up all the orders in between that had at a certain price point, and price went lower than that or higher than that. As a result, those orders were unfilled. But what price tends to do is, price usually goes lower, and from a certain level it comes back inside of that gap and then continues lower or higher depending on what the market is doing. Okay, which way the gap is. So in this case I'm showing you the down close candles, but regardless of the color, this gap can happen between a green candle and 2 red candles, or a red candle and 2 green candles. It can happen regardless of color. Okay, but whenever there is a gap like that, that is actually fair value gap. In future I will show you how to use it in terms of trading or the strategy that I'm following right now, but for now you need to learn about the gap. So what I said is, when 3 consecutive candles is not touching each other, like all 3 needs to touch each other, So first candle and second candle touching each other, second and third touching each other, but first and third is not touching. So there is this area of gap. Okay, so this specific area is called the fair value gap. And similarly, you can see it's not touching each other. Okay, so let's say this candle's wick was like this. Okay, so now there is no gap between these three candles. As you can see, it's touching each other. Okay, so it's touching each other, right? But what happened on the other three consecutives, right? So 1, 2, 3. Now since it's touching each other, there is no fair value. But when the top candle, like the last candle formed, my 1 shifted from this one to this one, because now I need to look for these 3 consecutive candles. So now these 3 consecutive candles, they are not touching each other. So let me make it in a different color so that you can understand. And what happened here? This is a high, this is a low. They are not touching each other, right? So this specific area is called the fair value gap. As the name says, fair value gap. Okay, so it was unfair for some people, right? Because those people didn't get their order filled. So it was unfair for some people. It can be bullish, it can be bearish, but that's why it's called fair value gap, because it was unfair for that specific moment. So what price tends to do is, if it's going lower, keeping a fair value gap on top, price goes to a certain level, maybe it can come here, then it goes back to that fair value, fills it up partially. It can sometimes fill up partially, it can fill up 100%, it can even sometimes go up higher with the wick, and then it starts to continue its move. And on a up close candle, let me just hide the bearish candles and let me delete this. For these sort of moves, what price does is, price made some unfair move over here and left this gap. So now from a certain level, price tends to come back inside of that fair value and then it goes up. Okay, I hope that part is pretty clear. And now I will give you guys some live chart example and I will come back to the measuring gap after that. Any places on the chart, so there is this gap, it's not a fair value gap, it's a different sort of gap. It's coming pretty soon in the channel, so I hope you will be subscribed or you will be with me, and keep patience guys. One thing I want to mention here is, when you study a degree, a course, right, even a diploma takes around 2 years, a bachelor's degree takes 3 to 4 years, masters another 2 years or so, PhD 4 years, sometimes you may take 5 years to finish a PhD, right? So why you study all those things? You study because you can have a sustainable life, sustainable income source, a job, a secure life, right? What you are trying to achieve here with trading, you are trying to achieve here the same thing, right? You are trying to have sustainable incomes. Profitable trader has the sustainable income. I mean, it may vary, but you are trying to make the same outcome from trading as well. Okay, so if that is your goal, you need to give it some time as well. And what I am doing here right now is actually trying to make things easier for you guys, so that you don't need to spend 3-4 years on the chart just to learn how to trade. Okay, that's why I'm making these videos, and that's why I started with smaller, like the smallest possible thing in trading, to the level where you can actually look at the chart and you can identify why price is doing what it is doing. Okay, so let's find out some fair value gaps. As you can see, 3 candles touching each other, 3 candles touching each other, 3 candles touching each other, touching each other. Okay, up until when this candle became my number 1 candle, number 2, number 3, there is this gap. So there is this fair value gap. Now there is this fair value gap. Okay, and then what happens? 1, 2, 3. There is a very small fair value gap over there that I'm not gonna mark straight away, because you can see like these 3 candles are not touching each other, very small. However, there is no fair value gap between these three, but there is another fair value between these three. Here, fair value. Now, one more time, fair value. Market came to that fair value, started going upwards, but there is a huge gap over there. This is called like new week opening gap or new day opening gap, however you take it, since it's the first day of the week, also first day of also it's a new day as well. So new week opening gap or new day opening gap, however you want to mark it. Anyway, there is another fair value right here, there is another fair value right here. After that, there is no fair value, there is no fair value until here, that is a fair value. Okay, so 3 candles, consecutive candles, when they don't touch each other, that's a fair value. Then there is a very small fair value gap that price came with this week. If you cannot see it, I will mark it right here. So this is small fair value, price came exactly to that low and then started going up high. Then there is no fair value between these three and these three until this became my 1, 2, 3. There is a fair value right here. Price came there, went up, and then finally when it came down like that. And then what happened? There is this fair value. Okay, so let me change the color for this one so that you can understand. There is that fair value. Okay, price tapped with the next candle, it just tapped the bottom. So that's the thing, right? Fair value, sometimes price can go to the highest part, sometimes it comes to the middle part, sometimes it comes to around 25% level, sometimes it just taps the lower and then it starts going lower. I'm teaching you what the fair value gaps are, okay, and then I'll teach you what the measuring gaps are. So at the moment, 3 consecutive candles, when they don't touch each other, that's your fair value gap. Okay, now what are the measuring gaps? Okay, when there are multiple fair value gaps on a run, okay, when price moves towards a direction, that's we call that a run, right? When there is a multiple fair value gap, the first fair value and the second fair value, or like the first to last fair value, that total area is called a measuring gap. 2 fair values or 3 fair values together is your measuring gap. Why? Because let's say this is, I'm currently on a 15 minutes time frame. Okay, 15 minutes time frame. When there is the measuring gap is actually a regular fair value gap on a higher time frame than you are currently at. And let's give you guys some live chart example. Okay, so here is a live example. You can see there is 1 fair value, 2 fair value, 3 fair values, and this one already, you know, like it's already filled 100%. That's why I'm not taking this one, but there are these fair value gaps, right, on 15 minutes time frame. Let's go to the hourly time frame, the higher time frame. It becomes 1 fair value gap. So what is the measuring gap? When there are multiple fair value gaps on a lower time frame, that in a higher time frame is your regular fair value gap. So this sort of area is your measuring gap. For now, you just need to know the fair value gap. Okay, even the measuring gap is not that important because there are multiples and you will see this sort of moves multiple times in the market. Here, a small little fair value, then a huge fair value. Here, 1, 2, 3 fair value gaps. So here there are one small fair value gap with the order block and another fair value gap here, multiple fair value gaps here. So you will see this sort of things a lot of time. Okay, let me save you guys some time.
Can be retraded to multiple times and they reclaim them sometimes as support or resistance. And then we have this large gap here, these 2 down closed candles. That's one big fair value gap in the form of a SIBI. If we were looking at a 2-minute chart, right now it's 1 minute. If you do this on your own charts, look at this area here on a 2-minute chart. That's 1 candle down. So it's only trading back up into consequent encouragement of the 2-minute range of these 2 specific 1-minute candles. So in easy language and layman's terms, from this candle's low and this candle's high, on a 2-minute chart, this is one down close candle. Midpoint of that is where it's trading here. That's consequent encroachment. This is a fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency, and it's a measuring gap.
So that was ICT himself, the original ICT, who taught us all these things, and his lectures are completely free on his YouTube channel as well, but there are a lot of informations that without knowing any background or without knowing the things from earlier stages, you will get confused, you will get lost. And also his videos are quite large and big, and here I'm trying to make it easier for you guys in terms of all the specific things. Okay, unfortunately I had my microphone muted after like while I was playing that video, and I forgot to unmute my microphone, and whatever I said here, whatever I talked here, I actually missed it all. Okay, so I'm just doing some voice narrations. So yeah, hope I was able to give you guys some idea, and for now on, just stay with the fair value gap. I want you guys to mark all the fair value gaps. This will be your homework if you are serious about learning these things. So mark all the fair value gaps on your chart and extend it to the right side, and see how market reacted on that fair value gap, and the areas that market did not respect or reacted, extend it to further right side, and see if later on market came back to that sort of fair value gaps and reacted or not. Okay, so yeah, just observe the price, how it works, how does market reacts on a specific fair value gap. And if you're new to the channel, I hope you will be subscribed after watching a video like this one with some proofs. And yeah, and in future videos I'll come with proofs as well. Anyway, so if you're new to the channel, please subscribe to the channel, stay connected, and let me know in the comment box how you find my videos, if it's good enough for you guys to, you know, actually help you guys teach something or learn something. And yeah, until next time, take a very good care of yourself and your family and your health as well. Until next time, bye bye. Thank you.